Welcome, investors and traders. Today's video will be about data-driven indicators. As you know, we use no emotion while we invest, trade. So we're going to give you a few of the indicators that we use to make a system. Feel free to use one of these indicators or all these indicators, but make it your system. Use the indicators and look at them each and every day to give you a successful run in this market. This is not a get rich video or saying that if you just follow me, you're going to become a millionaire overnight. This is you looking at the information I give you, taking the indicators, and making it your own. We will be a crutch for you. Let's start off with a disclaimer. The information provided on our channel is for educational and informational purposes only and is not intended to be a substitute for professional financial advice. Protect your capital by all means. Remember, this is your capital. Let's continue. Let's start off at the beginning and what do we believe is going to happen in this market? So first of all, we believe short term we are bullish, intermediate term we are bullish, and long term we are bullish. As you know, last year we were bearish. This year we're changing our story to bullish. But let's start with the beginning part and look at stage analysis. And you're going to say to yourself, well, stage analysis is neutral. How can you be bullish if stage analysis is neutral? Well, there's specific stocks that will be driving this market. And even though the S&P 500 securities, 61% are bearish and on a downtrend, and even the NASDAQ 100, only 53% of the stocks are in an uptrend in a growth phase, we have figured out that this is a split market. And technology companies like Apple, Amazon, Microsoft, Tesla, Google, NVIDIA, Meta, and many more technology companies will be going upwards. So when we say a split market, we need to be specific stocks that we are investing in. This is going to be the important part in the next 1 to 3 months, as we don't see the S&P 500 in a growth phase. We see specific stocks inside the S&P 500 in a growth phase. NASDAQ is a little bit easier at 53% bullish, but still we like to be stocks specific. What we try to do is we try to look at the overall market and try to time the overall market. And we see many positive signs for the overall market. There is one problem: market sentiment. What's our trading edge? Our trading edge are the many indicators that we use, and we will be giving you some of them today. What's the high probability of investing? We believe short term, we're going to show you today that there is a very high probability. Short term, we are bullish. Intermediate term, we are bullish. And long term, we are bullish. As you know, we use a three-part process: overall market, broken down to the sector phase, into the individual securities. So now that we talked about stage analysis, what is a problem that we have? The VIX and the VXN. Even though they are at euphoria levels now, we believe they will go lower in the next 1 to 3 months, setting this market off even higher. Remember, a VIX 14.13 over a 10-year period is not the lowest that it can go. Over the last 3 years, 2 years, yes. Over COVID days, we are seeing these levels. Let's go next. A proprietary indicator, short-term overbought, oversold indicator, are seeing very low levels. And when we usually see these low levels, we will get a pop. At least these pop to get this to 100. The pop may be 1%, 2%, 3%, 5%, but we will get an oversold rally in this market. We also combine a short-term indicator, a medium-term indicator, and a long-term indicator with an exit swing signal. All of them you can see are relatively low. Maybe you can say the medium-term indicator is neutral, but we are expecting a pop. What we are very excited for the short term is that we follow and we break it down into components of RSI, a type of RSI. Now, this type of RSI, we take all of the NASDAQ 100 companies and follow it for 4 years, 5 years. And when we see a number like 20.38, those are extreme levels, and we have a 90% probability of succeeding. And this says that we are going up higher. Now, the FANG index is not that low where we can see definitely indicators of 0 before it pops, but thus saying that these are still at very low levels from what we are at. Let's continue further. We started with the overall market. A lot of indicators are showing that we are bullish. We break it down into the sectors, technology, semiconductors, and then we break it down into the individual securities. We have been focusing the last 4 months on Apple, Amazon, Microsoft, Tesla, Google, NVIDIA, and Meta. All of them are inside the NASDAQ 100, the QQQ, and heavily weighted. What is our problem? It's the market sentiment. Many retail people believe the same thing that we believe. Many put call options when most of the time people who buy options, call options, are usually wrong. But thus saying that, this is what we call a weight of evidence. We are weighing the evidence, and as many technical indicators and data indicators do not all work at the same time. So you need to weigh each of the evidence to come up with an answer. But let's go further why intermediate term and long term were even further positive. We've talked about and done videos about the presidential election cycle theory. No matter if you're a Republican or Democrat, it does not matter to me. What matters is whoever's in office will try to make the 3rd and 4th year going into election positive years in the market so they get reelected. It doesn't make a difference if you're a Democrat or Republican. Also, we have seen in bear lows, and when it jumps off 20%, there's an average of a 30% gain after that. So if you forget about the emotions you're hearing and just the probabilities of success, just with the presidential election cycle and the bounce off the 20% low, we are in a very good position. You can see what has happened other times with the 20%. Bear market, 20% up, off to the races. Bear market, 20% up, off to the races. If you look here, we've had a bear market. We're 20% up. We believe we will go off to the races. Let's look at some of the ETFs and securities that we're looking at. If you look at the QQQs, you cannot say it is not on an uptrend. You cannot say it's not like a rocket ship going up. Could we pull back a little further? Absolutely. Could we pull back and give a little bit more back? Absolutely. But don't forget this indicator over here, which has worked very well short term in timing the ups and the bottoms. We will rally. Will we rally 1%, 2%? Will we rally 5%? We will rally in the short term. That's 1 to 7 days. We look at the spiders. Not as powerful as the QQQs because the Magnificent Seven AI companies, semiconductors, are really driving this market forward. And you can see the spiders are having a good run. But if the QQQs go upwards, which we think, it will bring up the spiders also. SMHs, very powerful moves, specifically from NVIDIA. Let's go to NVIDIA. When we gapped up, we came up with a video further telling you to buy more NVIDIA when we were in NVIDIA since December. And we are not pulling back. We are riding NVIDIA up higher. We go further, Netflix. All these look kind of the same. And they are all on an upswing. So, of course, do your homework, talk to a financial advisor. But I think we've given you some weight of evidence that short term, intermediate term, and long term, we are headed up higher. Please study each one of these indicators. Please come back to our channel and look at our specific proprietary indicators when this number gets to 100, when this number gets to 0. We encourage you to study it, analyze it, Adapt it. Peace and good luck investing and trading.